Hello and welcome to today's live WASDE 360 presented by AgriStampo North America and our producer marketing information services team. That team consists of Brooks York, who is our Director of Producer Services, and Sterling Smith, who is our Director of Ag Research. They are going to tell you today what you should be expecting in terms of this new report that's coming out today. We'll listen to what they have to say, their analysis, and then we'll watch as that report goes live and how the markets react to it. So I'm going to pass it on off to you, Sterling. Take it away. Let me know what I can do to help.
Okay. And good morning, and I'd like to thank everyone for taking the time for being with us this morning. Today we have the July WASDE, and traditionally this is the first time that the Office of the Economist at the USDA addresses issues like corn acreage and corn yields are the two big things that I'm looking at seeing some changes with today, and those are going to be the things that are going to drive volatility. Something else we need to think about here is, where we're going to be with the cotton market and things like that. We have a cheat sheet that we will be sending out to you after the report and maybe a little market color to go along with that. If you have any questions, feel free to reach out to myself or Brooks. We'll be happy to answer any question, all questions. No, don't feel bad that you're interrupting or anything like that, or don't feel your question isn't important. Any question is important, and we want to hear from y'all. Something that I would like to point out to you is the services that we do offer. And something that you can sign up for is our daily market call, where every morning at about 10:30, 10 o'clock, we give you a quick market overview and tell you what's going on and what's driving the markets. We have the daily market outlook, which I write 3 days a week for, which you'll see, technical analysis. You will see a look at exports. Exports are the biggest driver in this market after weather, and we need to pay attention to them. And that's something that when we start talking about the WASDE here a little bit more, we're going to get into in great detail. Also look at the funds and their position to give you an idea of where the market is geographically. Right now, funds are not as long as they have been, and prices are kind of depressed, which makes this report a little bit interesting. Every third Thursday, which is coming up this Thursday, we have our marketing meeting, and that's a chance for you to sign up, call in, talk to us, and we go over a wide range of topics from agronomy to I may talk about interest rates to Brooks may talk about things down on the farm. So there's plenty going on with that. On Fridays, the Friday Afternoon Marketing Club, I take a look at the COT positions. I also look at the outside markets and other things that are driving just beyond things that are right in agriculture that we already know about. And then every day we also have a daily livestock price report.
Sterling, this is Brooks. I'm joining you by remote today, and I apologize for not being there on video. But as we step into this report today, it's got a little bit different feel to it than maybe the last few months when we've done this. The last few months we've kind of concentrated on these old crop stocks that we're seeing and how they calculate into the balance sheet going forward. Today, our focus is a little bit, I guess it's more focused on a couple different things in the marketplace, maybe not so broad. What are the primary factors we need to be watching today?
Yeah, old crop futures are off the board, so no one's going to really be too worried about that. What we're going to be looking at is obviously ending stocks. If they do something with that previous stock number, that'll show up in the ending stocks. What we're going to be looking at are acres for corn and the yield on corn. Is the USDA going to address, potentially lower yields than what we had last time? We were at 179.5. My friends at Planalytics have the yield right now at 175 nationally, but by adding these South Dakota acres, that is going to pressure yields. The other thing is harvested acres. Are we going to change that? Are we going to address the situation with the drought in South Dakota and Northwest Iowa via acres? Those are the other things that we're going to be looking at.
Sterling, on this third Thursday marketing meeting coming up, we're going to have Mike Tuhill with us. And if you followed along, we're doing this virtual crop tour, and I'll be the first one to admit when we started to do that, I guess it was 8 weeks ago, I didn't know exactly how valuable it would be. And boy, it gives me good perspective as to what's going on in a lot of different states down on the farm. And I think that the North Dakota, Minnesota, northern Iowa areas, it seems like they just hold on. And visually, I think the crop looks remarkable for what it's been through. It's going to be real interesting to see how yields correlate with that. And, there's a lot of folks right now, and I think getting Mike's opinion on some of this, how much has it affected yield? I think it certainly affected yield maybe to a lesser extent than a VHI map might indicate. It reminds me a little bit of what we went through down in Brazil last year, where we ran big deficits, but we had just-in-time rains. But like you've mentioned, you're getting ready to go into the oven again this next week with temperatures going back up, and we know it's had some effect on yield. So that's going to be a primary factor. To say this is a disastrous crop across the United States is far from the truth, but it would take every cylinder firing in line, I think, to get us up to that 179, 180 level, and that's certainly not what we've experienced so far.
Yeah, I'm going to be talking about this. I'm going to be doing a global outlook that you can sign up for. It'll be recorded. It'll be first available on July 20th. Taking a look at exactly what happened in Brazil, because yes, we had timely rains, but at the end of the day, yields fell off a cliff. Production fell off a cliff for that second crop. So that's something that's going to be driving things that are going on. I'm also going to talk extensively about Chinese hogs and how that is going to affect you right on your farm, because it is going to matter and things are definitely changing. And again, we'll have links in the DMO for you to sign up for this, or again, if you need a link, feel free to reach out to me. If you have any other questions.
Sterling, as we get into this, and we've mentioned, the Chinese hog situation, which basically correlates to our exports over to China. We talked about that corn yield. I mean, today, I think everybody needs to know that, while we like the July WASDE, it certainly doesn't carry the impact that maybe they did 3 months ago. And it's mainly one component, maybe two components of what goes into a big formula. So, you mentioned today, corn acres. As far as old crop carryouts, we're getting close to the end of this crop year. I think the market feels pretty comfortable. It's not going to be too surprised if we come in at 110 or 140 on beans. If we come in at 1.1 or 1.3 on corn, could there be any surprises on that old crop stocks number?
As far as the old crop stocks number, no one's even looking at that. Well, that will be incorporated into the new stocks number, and that's what everybody is going to look at. That's where we're going to go. There is an unusual potential for a change this year, only in that corn exports have been so big and so different from what they normally are. That sets the stage for a potential surprise in corn. Soybeans, if you're looking at the Thursday reports, the export season for soybeans is basically over, and there's really not a whole lot of things going on with that.
It's funny that it's just July, and having farmed on my own here, you don't have an exact idea of what's out there, but you start to get a little bit better picture of whether you've got an average slightly above or a potential for a big yield out there. So we're slowly starting to gain that foresight as to maybe a range of what we got out there. I mean, there could be some last minute surprises always. We talk about a lot of these components out there, and as we start to get a more, I shouldn't say certain picture of yields, but a general picture of yields, the usage numbers become big, and they become big on corn because we need excess carryout to switch acreage to soybeans. I mean, that's kind of what the market knows. When we look at those corn usage numbers, let's just boil it down and look at the three primary categories: domestic feed, ethanol, and exports. I mean, I think both of us agree that it certainly looks like exports can be strong and meet expectation into the future. Domestic feed is one of the more predictable numbers, and even a decline would be very, very small, and indicators don't look as if there will be a decline. Tell us a little bit about ethanol, because it looks like to me of the big three, ethanol may hold the cards to, probably not increased usage, but decreased usage. What do you see in that ethanol market over the next 12 months?
There is the potential for, if we see lower miles driven, that would obviously be the first thing that would pressure ethanol production. If we were to see a resurgence of COVID, if we were to see this Delta variant becoming a problem, then that is definitely something that could affect those ethanol numbers and pressure them. That's the other thing, obviously, outside of weather and exports, that could, really move the balance sheet in a meaningful way. And Christy, can everyone see my screen? You can? Excellent. Something that we want to talk about right here is the corn ending stocks number. Right now, the last ending stocks number for corn came at 1.357. The average survey is about 1.36. And then when they take these surveys, they kind of guess what the USDA is going to say. Frankly, I think the USDA is probably going to come in a little higher than this, simply because they don't usually adjust things that much. But the reality number is much lower, where the street really thinks we're going to end up with corn ending stocks. I've seen estimates as low as, a smidge under $1 billion to somewhere maybe as high as 1.4. So we're definitely going to see a lower number. And that's going to be a function of Chinese import demand, what we see in the sales going on there. And it really also depends on this yield number. Right now, we're at 179.5, which is really generous. The survey for average yield is 178.74. If I had to peg yields, where I think the USDA will put them, I don't think this is our actual yield, but I think the USDA probably puts them around 178. They're going to try and bring, this ending stocks number down a little bit to adjust for what's going on. In terms of soybeans right now, we're talking soybean ending stocks at 1.55. There hasn't been any big change in the export corridor, any big change there. There has not been really. It's July. We can't make any big guesses about soybean yields right now. So.
Sterling, on a cash note, so if we got farmers on the call today and agents that work with farmers, one indication of what the market thinks or what the street thinks, as you referred to, is basis levels. And basis levels, for new crop, specifically the early part of harvest, 2 months ago, in all honesty, there's not a lot of trade. There's not a lot of definition to know where that's at. One thing I've noticed in the last week is where I'm located in Southern Illinois, we've got really three primary markets. We've got the southeastern market, which would be our domestic feed market. We've got the ethanol market, a couple of 2 or 3 plants in the area that bid, and you've also got the SIF market, which is the export market. And I've really started to see those markets start to wake up a little bit in the last 7 days. If you guys are following bids out there, when you see those basis numbers for September, especially for first half September, you start to see some pretty good numbers start to come out. And that's, as Sterling indicates, the streets thought on it. That's a really good way to gauge where they think that carryout's at. They think it's probably a little bit less than maybe what's posted out there, and we can kind of see that on the farm through basis numbers.
Absolutely. The basis, the old trading analogy is you look at basis, spreads, then flat price is the last one to know. That's kind of how people look at this, and that is going to be how we kind of look at the market here. So that's something where, again, we start to see Gulf basis pick up noticeably. That is something that will, definitely affect the market. And I don't know if Wall Street's as clever enough to catch on to that as they should be, but one never knows. So we're coming up right on the report here right now. And boom, corn ending stocks 14.32. So we were a little bit higher than expectations. Corn yield, they did not address corn yield. 179.5 was right where we were the last time around. Going down here to soybean ending stocks, 155. So they didn't do anything on the soybeans. Nothing changed there. As far as corn ending stocks, from the previous report, it doesn't look like they did anything. They did add to exports a little bit here. So those are the biggest changes that we have right now. Looking down here at cotton. Cotton, the actual number is 330. So the cotton number actually came out a little bit bullish, and we actually added a little bit to the cotton numbers here.
Sterling, being on a little I'm on the road today. I'm actually down in Kentucky, and I'm on a delay. How have the markets reacted to the numbers so far?
Okay, I'm bringing up those quotes right now, and so far it hasn't really shown too much here. Hold on here. Let me get these.
You kind of wonder. This is not historically one of these reports that it's a wow moment for the markets. And
kind of depends on the report. And here we're
painted the picture that there's a number out there that the street is trading, and that may very well be the case today. That takes precedent over any printed number.
Yeah, and I'm getting our quotes here. There we go. Right now, it looks like December corn is it's up 2 cents on the day. We were up about 8 prior here. Actually, hold on here. We're up 4.4 3/4 on that. And soybeans here doing quite well. We're up 15, 20 cents. So markets were firmer coming into the report, and we really didn't see that big of a change going on. One thing, soybean oil is almost limit up, so that's certainly something that's going to be influencing the market. But as far as the market reaction to this, I would say sanguine. It's not a big deal at all, really. The market's wheat is up a little bit. I think we're still more tracking weather because if you look at this report, yields unchanged. We bumped exports up a little bit. There's really nothing here that's changed, so we're going to be right back trading weather here in the next 5 minutes.
I think that's probably the best advice or best news that we've got to broadcast. Maybe the most objective is that the overall tightness of the markets is just takes precedent right now. Yeah. And the volatility that we normally see dissipate about this time of the year. Another 30 days of high volatility, and it even goes down within those 30 days historically. That may not be the case this year. We may be watching this thing a little deeper into August, and we may even see. I think that if you listen to Sterling and I over the last 6 months, we're cautious because we want to take advantage of these, but we also believe that this is and the supply issue is one that it may take a period of months to work through. It may take 2 crop years, whether that's a Brazilian crop year and a U.S. crop year. So we've certainly these markets are going to be on edge for weeks, if not months, to come here.
We're going to be on edge until that next Brazilian harvest happens. The change of what's going on in the hog industry in China is going to have a global footprint. We like to talk about weather. Talking about Chinese hogs, people get a little concerned, but I think we're going to find ourselves going from where we had a Chinese hog market that was sitting at 600 to 700 million hogs that may be at an average weight of 180 pounds. We're going to be moving to a Chinese hog industry that's sitting at 1.1 billion hogs, and I'm not even going to take a guess on how fat these things are going to be. Those 400-pound hogs, they're not growing those and showing them off for fun and invention. The Chinese need to change and need to increase the protein in the diet, and that is going to drive feed prices more so. Other than weather, that is going to be the biggest thing. One thing I'd like to point out here on the WASDE is the wheat yield was cut to 45.8, and the ending stocks for total wheat is cut to 665. So a lot of times we don't talk about wheat as much maybe as we can or we should, but noticeable numbers there in the wheat, and that's a sign that the USDA is acknowledging, the situation that's going on in the Dakotas.
Yeah, if you catch that virtual crop tour the week before last, I showed some small grains up there in northern North Dakota, and there was a yardstick in one of the fields, and I think the total height on some of those, if I'm not mistaken, it was a wheat field that was shown. It was 6 to 7 inches tall. So, and you know, it's done its thing. It's just basically waiting back to see how bad things are. Sterling, I have to. Many apologies. I'm going to have to step off here. I know that you can take us the rest of the way, but I do appreciate everybody tuning in, and I'll let you kind of provide a conclusion for the folks out there, and hopefully we get some good markets down the road.
Absolutely, Brooks. Thank you, and you safe travels. So coming back and looking at prices here, really December corn's holding up at about 3 cents right now. We're at 5.20 and a half. And November soybeans 13.35, and those are now up about 7 1/4. Again, if I were going to pick out besides the wheat, this report was, I wouldn't say a non-event, but it wasn't nearly as big of an event as we thought. One other thing I'd like to point out here on line 47 on my screen here, if we look at old crop ending stocks for corn, they took that down to 1.82, down from 1107. So they cut that again by 25 million bushels. And this, again, this wasn't a yield cut. This was exports, I'm guessing. I'm not looking at the full report, but I'm guessing that they bumped exports up again, and they bumped up exports on the new crop. That is something, if you're reading my stuff on Thursday, we need to pay attention, because that, after the weather, is going to be the biggest driver. And in tomorrow's DMO, I will put down a breakdown and go over all of this, as well as taking a new technical look at the corn market, which markets are very oversold right now. The funds are not nearly as long as they typically are. And I think we need to, think about that, because there is certainly the potential for them to come in here and start buying, and we could certainly lift and elevate prices, particularly if we get a little bit of a story, because I don't think, in my opinion, that 179.5 yield is going to continue for any extended period. Christy, did we have any questions?
There are no questions. I do want to remind everyone that today's webinar has been recorded. We will have a link to this recording and the slide deck in our next DMO, or in our upcoming DMO today or tomorrow. And also just wanted to remind everyone that if you would like to sign up to receive any of these services, that I have put the link in the chat box. It is marketinginfo@sampo-international, and that's abbreviated INTL.com. We'd be happy to get you signed up for any and all of these things, and make sure that you're in the know, so that you know what's going on in the ag industry. Are there any final comments, Sterling, before we stop the recording?
No, I just want to remind everybody, again, if you have any questions, feel free to reach out. And remember, we aren't at the highs in the market, but should be at very good profitable levels, especially for the soybeans. So again, if you have any questions about your hedging programs or whatever, feel free to reach out. And with that, I will talk to everybody soon.
Sounds good. Thanks again for joining us. Have a great day.